Good afternoon, everyone, and welcome to the UCO Bank Q4 FY26 earnings conference call. Today, from the management side, we have with us Mr. Ashwini Kumar, MD and CEO, sir, Mr. Rajendra Kumar Sabu, ED, and Mr. Vijay N. Kamble, Executive Director. With this, I hand over the call to MD, sir, for his opening remarks, post which we will have a Q&A session. Thank you, and over to you, sir.
Thank you. A very warm welcome to all the analysts and investors to this post results conference call for the financial year 2025-26. Am I audible?
Yes, sir, you are audible. Please
Thank
go
you.
ahead.
Thank you. So I have with me our executive directors, Mr. Sabu and Mr. Kamble, and also our CRO, CFO, all other top management team is with me. So thank you for joining the conference call once again. I'll just give you the brief about the overall performance of the bank for the last quarter and the full financial year. Our business grew by 14.95% on a YOY basis, and the gross advances grew by 19.44% on a YOY basis, and deposit grew by 11.59% basis. Within deposit, our CASA growth was around 12.46%, which saving grew 11.878%, and current account registered a growth of 16.77%. Our CASA ratio was maintained above 38. Our guidance was 37 to 38. CASA was 38.65, improved by 75 bips over last year. And within the advances, our RAM segment grew by 24% plus, and in the RAM segment, retail advances grew by 26% plus, agriculture advances grew by 26%, and MSME advances grew by 19%. Within the retail, housing loan grew by around 19%, and car loan growth was around 71%. Coming to asset quality, our asset quality gross NPA improved to 2.17%. There is a 52 bips reduction over last year. Net NPA was brought down to 0.27%. There is a 23 bips reduction over last year. PCR improved to 97.79%, 110 bips improvement over last year. Excluding TWO, PCR improved to 87.66%, 571 bips over last year. And coming to profitability, our operating profit for the full year was 6,429 crore. That is a growth of 6.49%, and full year profit was 2,768 crore with a growth of 13.21% on a YOY basis. Net profit for the quarter ended was 801 crore with a growth of 22% on a YOY basis. Now coming to the guidance versus actual achievement, our deposit growth guidance was 10 to 12%. Achievement is 11.59%. Credit growth guidance was 12 to 14%, and our actual achievement is 19.44%. CASA percentage was 37 to 38%. Actual is 38.65%. RAM percentage we targeted 61 to 63%. Actually 65%. CD ratio, our target was 75 to 77%. We have achieved CD ratio of 80.21%. Credit cost guidance was less than 1%. It is 0.62%. NIM global, we have given a guidance of 2.8 to 2.9%. Actual NIM is 3.03% for the global, and for domestic it is 3.23%. Gross NPA guidance was less than 2.5%. Actual NPA is 2.17%. Net NPA guidance was less than 0.35%. Actual is 0.27%. Slippage ratio guidance was 1 to 1.25%. Actual is net slippage ratio is 0.78%. Total recovery and upgradation guidance was 2,200 to 2,700 crore. Actual is 2,944 crore. Now coming to the guidance for the current year, deposit we have kept the guidance in the same range, 10 to 12%. Credit 12 to 14%. CASA again 37 to 38%. RAM we have improved our guidance to 62 to 65%. CD ratio 80 to 82%. Credit cost less than 0.75%. NIM global in the range of 2.8 to 2.9. Gross NPA less than 2%. net NPA less than 0.2%, slippage ratio less than 1%, and recovery and upgradation in the range of 2,000 to 2,500 crore. Now, coming to the other parameters, our cost to income ratio, which has improved by 581 bips over last year, it is now 52.66%. Our fee-based income grew by 32% on a YOY basis to 516 crore against 389 crore. Our capital adequacy ratio, that has improved to 18.61% with Tier 1 capital of 16.59%. Board has approved declaration of dividend at the rate of 4.40%, that is 44 paisa per equity share, subject to approval of the shareholders in the ensuing annual general meeting, which works out to be dividend payout of 20% approximately. Business per employee of the bank has improved to 28 crore as against 24 crore a year back, and business per branch has also improved to 173 crore as against 155 crore a year back. Provisional coverage ratio also improved to 98%. We have total number of 3,412 branches and 2 overseas branches in Hong Kong and Singapore, and 1 representative office in Iran. So 110 branches have been opened in the last financial year. 61% of the domestic branches are spread in rural and semi-urban areas. Now, let me talk about the initiatives which we had earlier talked and where we do stand and what are the further initiatives which we are planning. The initiatives which we earlier last year spoke, which have been completed, is the CBDC that is now available in both iOS Android phones. Performance management solution has also been completed. Learning and Development Center of Excellence has been completed. Project Parivartan we initiated last year, and that Project Parivartan, where we are focusing on the digital transformation and digital business, has come a long way. Till now, 31 journeys have been completed, and our total digital business across asset and liability has crossed 25,000 crore in last year. Mobile banking users have also increased five times from 82 lakh to 153 lakh in 3 years, whereas the active mobile users have increased from 14 lakh to 70 lakhs in 3 years. So the active mobile users, vis-a-vis registered mobile user percentage was 17% 3 years back. Now it has improved to 46%. We started tab banking with the across the branches. So all the branches have been given tab. In this last financial year, more than 10 lakh accounts have been opened through tab banking. Percentage of accounts opened through tab banking without excluding BSBD and PMJD account is 66% accounts are opened through the tab banking. We launched WhatsApp banking also. So now more than 20 lakh customers are onboarded on the WhatsApp banking channel, and 49 services in 14 languages are available in our WhatsApp banking. Many new features have been launched in our call center and in our mobile app in the last financial year. New treasury solution, Murex solution has also been implemented. Implementation has been completed. Data center consolidation we started last year, that has also been done in Kolkata. We have started mule account monitoring through UCO Vigil Plus under transaction monitoring vertical. Our API gateway has been has started now. Automation of ALM TPM has also been completed. Application performance monitoring system has also been implemented. Feedback mechanism system to watch and improve customer service was implemented, and that has also started working. Now we are getting real-time feedback from our customer through SMS, through QR code, and through website and our WhatsApp banking channel. We have already integrated with Mule Hunter and IPC. And another initiatives which are planned now for this current financial is, one is Omni channel, second is cash management services, third is supply chain finance, robotic process automation, digital marketing solution, forex card and prepaid card solution, document management system that is already going on now. It will be completed this year. E-note facility to remove the paper from the system. Identity access management for cyber security. Centralized log management system. Now we have planned to convert our call center, which we implemented 2 years back, to call center as a profit center. That project Parivartan phase 2 has been launched. Centralized monitoring and system has been implemented for the credit loan sanctioned through EDCAM portal. Transformation management vertical has been set up with a widened scope, and it will be headed by a GM level now. In WhatsApp banking, additional services will be implemented. Cyber security vault near DR at Kolkata is another pipeline. CASA back office and centralized forex processing center is another project which we are aiming now. So all these are getting implemented now in this planning year, this year. With regard to IT budget, last year we have kept a budget of around 1100 crore. Around 900 crore has been spent, and this year also more than 1000 crore budget has been approved by the board for the current financial year. The spend for the last 3 years is around in 23-24 it was 576 crore. In 24-25 it was 642 crore, and 25-26 it is 899 crore. So every year we are increasing the spend also to bring more and more advanced technologies into the system. So this is all about the overall performance of the bank, and now we are open for the question answer session. And
Thank you.
over to you.
We'll start. Thank you, sir. We'll start the Q&A. Those who have any question, please raise your hand. We have first question from the line of Ashok Ajmera. Please go ahead. Mr. Ajmera, please go ahead. Your line has been unmuted.
Can you hear me, sir?
Yes, please, Ajmera ji.
Sir, compliment to you and the entire team, sir, for fantastic results. In fact, you have surpassed on almost every parameter, and the kind of growth which you have given, especially in the credit growth, is phenomenal, 19.44%, and even in this quarter itself, it is almost about, I think, 8%, the credit growth. Overall business growth is also good, deposit growth is also good, and everything is beyond the targets. You have achieved those results. But sir, what I see basically is that if I look at the guidance given for 26-27, sir, it seems that either some geopolitical situation is there in your mind, or the impact of this West Asia war, maybe going forward, you are anticipating that you may not have the kind of the growth which otherwise you could have achieved. So my first question is on that only, sir, that I want to hear your views on this current situation, and going forward, how the bank is taking it. Like in the first quarter, will there be some major impact you are expecting? Though if I look at the SMA numbers, in fact, your SMA2 of the high of the last quarter is some part of it is shifted to SMA1. So that's a better thing to happen. But the SMA1 has gone up from 260 to 651 crores. Overall SMA numbers are under control. So have you already started seeing some kind of stress, especially small businesses and MSME who do not have the deeper pockets due to this West Asia war and the other geopolitical situation? Or how do you plan to deal with it, sir?
So thank you, Ajmera ji. First, let me talk about guidance, which you have apprehended that because of this West Asia crisis, probably we have toned down the guidance. Let me make it very clear that if you look at our guidance for the last 3 years, our guidance is in this range only, and our achievement has always been surpassing the guidance. So last year also our guidance was 12 to 14% of credit growth. This year also 12 to 14%, and next year also we are planning 12 to 40% guidance we have given. If you look at our achievement for the last 3 financial years, for 2023-24, our credit growth was around 16%. 24-25, our credit growth was around 17.72%. And this year our credit growth is 19.44%. So the guidance was 12 to 14% all 3 years, but achievement was much more than the guidance. So similarly, guidance continues to be in the same range, looking at all scenarios. But I am sure the way we have rebuilt the organization, we will be surpassing the guidance with a good number in this financial year also, not only in credit, but in other parameters also. Because if you look at our NIM also, if you look at our credit cost also, our slippage control also, which used to be 1.7%, 1.75% 3 years back, now it has come down to less than 1%. And now we have toned down our guidance from 1.1 to 1.25% previous year to 1%, less than 1% this year. Accordingly, net NPA, gross NPA guidance has been toned down. So there is no such thing that because of this temporary crisis we have shifted our guidance downwards. Number one. Number two, coming to the any impact of the current situation, please, I would like to ask, request you to look at our SMA numbers also. Consistently, our SMA numbers are under control, and you know that every quarter we declare our SMA numbers more than 1 crore. Generally, there is a tendency of declaring more than 5 crore, but we declare more than 1 crore. More than 1 crore SMA numbers, including 0, 1, 2 put together, is 0.45% of standard advances. So whereas SMA 2 is less and SMA 1 is higher, I just wanted to request you to, because this financial year, February month impact is there. Every financial year, February month is. So SMA 2 is 60 days. But here in February, 28 days, and March is 31 days. So 15. So certain accounts which could have been in SMA 2 are figuring in SMA 1. So it's not that SMA 1 has jumped like that from somewhere else, but overall SMA remains the same, only bucket shifting is there. So maybe next month we'll have slightly higher SMA 2 and lower SMA 1. So that transition will continue this financial year because of the 28th February 28 days. That SMA 2 number is slightly low. SMA 1 is high because of 59 days impact. So this is about whatever you have asked. Thank you.
Sir, one phenomena which we are seeing in some of the other banks is that whenever there is a good profit or the condition is better, the results are better, they have started providing some amount on the standard asset only, extra more than the IREC. So in our bank here, I think the provision has rather has gone down. So are you not anticipating any kind of those unexpected kind, or that ECL or other impact? Or even in case of the wage also, I see that the wages, the salary is gone down. Employee cost has gone down to 182 crore as compared to 278 crore in the last quarter. So whether the revised labor code or anything is not impacting you, how are you dealing with those unexpected or unforeseen circumstances without creating some kind of a buffer, or do you have any buffer already?
Say, Ajmera ji, last quarter, I think we have declared that buffer of 720 crore ECL provision last quarter, and this quarter we have made a provision of 1,038 crore. So ECL provision held as on this quarter is 1,038 crore plus 341 crore contingency provision is also made. So if we take both them together, it's more than 1,400 crore is already available towards ECL. Along with that, during COVID times, we made 530 crore of provision for COVID-19 provision. So that is also available. So all three put together, today we are holding around 1,900 crore of additional provision as a buffer towards our ECL framework, which may trigger that time when we have to shift to that. So 1,900 crore of buffer is there. Now coming to the wage part. See, last year we made a additional provision of 260 crore towards our PLI, the previous financial year. And whereas the actual payment is around 100 odd crore only this year. So we are still carrying 160 odd crore of provision for the next financial year. So last year we made additional provision which we are not required to make this year. So on that account, that our wage or the employee cost is slightly down, because previous year 250 crore of additional provision was made because on PLI factor, which was being talked about for enhanced PLI to scale 4 and above employees, which could not be paid this year because of certain reasons. Now maybe next year it will be paid. So we have not reversed that provision. We have continued the remaining provision of 160 odd crore in this financial year.
Sir, this you already got the board approval for the QIP, but what are the plans in the immediate future with this present share price? I mean, the market somehow is not may not be understanding the kind of the result which you have declared, or the kind of the strength which you have. Even that provision numbers also, I wanted to hear from your mouth only, that such a, like when you have a cushion of 1,900 crore. So at this price, would you like to come out within this quarter with any? Do you have any plan for that, capital?
So this quarter we don't have any plans. We'll be going to the AGM for the approval. First we'll get the approval of the shareholders, and thereafter we'll, at the right opportune time, when the market also supports, that time we will go for the QIP. That time will not in the immediate this quarter.
Just last in this round, sir, is on the credit front only, because as you narrated for the last 3 years, it has been 15%, 17.5%, and now 19.5% to 20%. Going forward, I believe that in spite, even though the targets are very modest, you will be crossing that. So can I just know about our sanctioned pipeline, or what kind of industry or businesses which we are from, where we are getting the business as far as the credit is concerned? I can understand the overall ratio of the RAM and corporate, but within that, where do you see the scope for increasing further and maintaining this kind of momentum, this kind of a growth in the the credit growth going forward, sir?
See, we have around 14,000 crore of pipeline in the corporate segment currently, and we have certain sanctions also already in place. But because of the pricing issue, we are not able to disburse. We don't want credit growth in corporate segment at the cost of margins. So that is the reason we are not growing corporate credit at a below our expected price. So that is one. And the growth which is coming from, or demand is coming from renewables also, data center also, your smart metering also. So there are a number of areas where the growth is coming to us, and even road projects also have started coming little bit. So number of areas are there from the growth is coming, and there are many sunshine sectors where, but pricing is the biggest challenge, where we would not like to compromise before entering into a deal.
Oh, okay, sir. Thank you, and all the best to you. And if time permits, I will again come for further discussion, sir.
Most welcome.
Okay. Kamble sahab, Sabu sahab, and sir, all the best.
Thank you. Participant, please raise your hand for the question. Next question is from the line of Sumir Choksi. Please go ahead.
Yeah, hi sir. Am I audible?
Yes, please go ahead.
Yeah. Firstly, sir, congratulations to you and entire team UCO on a very good set of numbers. Sir, I have a few questions, so I'll just go about them. So, firstly, we've seen a good, healthy deposit growth on Q1Q basis, around 6%. So, how do you view the same growth, sir? Going forward, because of if there's a slight rebound even in capital markets, do you see this sticky deposit growth staying intact? So, secondly, what we've noticed is from particularly last quarter to this quarter, our lending split So I think we've cut quite a few larger checks to more AAA rated corporates. I think particularly on the PSU side. So incrementally, sir, how has the yield been on that book? And would you view that if we were to lend more in the AA bracket, would our yield be slightly better? Is that how we are looking at, maintaining a very competitive yield while hedging risk, or how is our view on that? I'll ask these two, sir, first, then I'll go forward with the rest of the questions.
Thank you, Sumir. First, let me talk about your deposit. See, earlier we were not focusing on deposit because our CD ratio was quite low. So now we have reached a CD ratio of around 80%. Our target was 74 to 77%. And that is the reason we focused more on the deposits also. And while focusing on the deposit, we have not stopped chasing CASA. If you look at our CASA, in spite of our deposit growth of 6% in this current last quarter, our CASA ratio continued to be in the range of 37 to 38. Rather, it has improved by 74 bps on a YOY basis. So our focus while raising deposit is on the retail franchise more than the bulk deposit. And going forward also, when we have to support the growth, so deposit concentration will continue to have focus on the retail term deposit and saving and current, to some extent in the our bulk deposit also. Overall, we have a target of bulk deposit to total deposit percentage. So we always continue to monitor and maintain our total bulk deposit within that ratio only. So that is on the deposit front. As far as AAA rated is concerned, if you look at our balance sheet, though this quarter we have increased exposure in the AAA rated and PSU, and same trend was there in the last year also. In between, there was demand from the PSUs was at a lower price. So that time we were not comfortable in lending to them. So slightly improved pricing was there. So we gave them the credit. So last year also, March 25, around 33% was in AAA rated. Now also it is 33% only. So AA is 29% and now it is 26. So whenever there is a better opportunity, we will be continuing to lend to AA and A rated accounts also, in addition to AAA rated accounts also. Yeah.
Yeah, sir. Thank you. So now, if we see in our digital side, we've got seen some very good traction, particularly in M banking. You touched upon it even in your opening comments, sir. And I think it's very heartening to see. So on this front, any new digital initiatives we are working on, particularly for younger customers, who tend to be high volume transactors on UPI and possibly are new to credit as well. Sir, and secondly, one more question was in retail loans, which products are covered under the others category? I mean, it's a 25% of your overall retail loans. It's seen a 40% year on year growth. So, looking at that, can you just elaborate on this? And how is the demand of vehicle loans in the current quarter? Because that book has also seen good traction.
See, so far as the one is about digital. You talked about digital. I see. We have revamped our entire digital journey, and last year on 6th January 2025, we launched our digital project, that is digital transformation project Privartan. And since then, we have been launching journeys for our customers. Till now, 31 journeys have already been launched across retail, MSME, agri and liability products. So total 25,000 crore of digital business has been booked, of which 11,000 crore is advances and 14,000 crore is liabilities. For the ease of young customers, I can tell you that digital FDR currently happening in our bank is more than 50% FD is being made digitally by our customers through mobile banking app. More than 50% loan against FD is also happening digitally by our customers. Then our STP journey of our car loan, that has been well accepted, and more than 50% car loans daily are happening through digital journey. MSME journeys we have launched, DST Smart Finance, MSME Smart Finance, that is also very well accepted, and good amount of business is happening in the MSME segment also through the digital journeys. For the ease of our young customers, we have revamped our entire UI UX of our mobile app, and you can see that our mobile app rating continues to be in the range of 4.7 to 4.8 amongst all public and private sector banks, which is one of the best ratings I will rate. And on Apple Store also it is 4.6. So that clearly tells that our app is well accepted in the market. Further to enhance our reach to our new generation customers, now we are bringing omni-channel experience also. So maybe this year our omni-channel mobile banking will be available, where it will be more interactive, more convenient for our customers. Second is now your digital you have talked about, retail. In retail, the other portfolio is includes our co-lending. A small portion is that, and that's not a huge. Mainly is gold and staff loans. So gold loan portfolio out of that is around 5,400 crores. And the growth which we are seeing in the other portfolio is mainly coming from the gold loan portfolio.
Okay. Understood. So one final question.
One more thing. One
Yes,
more
sir.
thing.
Yes.
More
Sure,
than
sir.
more than 2,50,000 customers have been given loan digitally last financial year. More than 2,50,000 customers. They have been sanctioned loan digitally last financial year.
No, sir. Of course, that's great to see because it's reflecting in your M banking numbers, which I think you'll have put a good slide in the presentation as well. Uh, sir, one final question from my side. So, to which external benchmark rate would we have linked our loans? Could you just shed some light on that?
The mainly is repo linked rate around more than I think 60%, 65%, 65% of our portfolio is linked to repo, because if you look at our retail and MSME, that itself is a huge portfolio. So RAM is 65%. So retail and MSME itself is a good around 1 lakh. 1 lakh more than I think 68,000 is our retail and 46,000 is our MSME. So to both put together is 1,16,000 crores. So more than 50% portfolio is in that segment itself. So 65%, because in some of the corporates also they will short-term loans linked to repo rate. Corporate in the corporate book, though they are sanctioned at MCLR, but they short-term when they have to take WCDL, they take repo linked rate.
Understood. So thank you so much for answering my questions and best wishes to Team UCO for the next fiscal.
Thank you.
Thank you. We'll take the next question from the line of Hriday Choksi. Please go ahead.
Congratulations to Team UCO, Ashwini sir, Sabhu sir, Kamli sir, on a great set of numbers, sir. Again, I think our performance has been growing year on year, and kudos to the whole team. So a couple of questions. So on our cost to income ratio, so we've shown a good decline this year, down from 56.99 to about 52.92. So we've seen a significant drop for a second year running. So can you just speak about your initiatives on that front? And just one specific thing, then the last quarter we've seen a 45 bip increase also. So if you can specifically speak on the cost to income bit first.
So on cost to income front, we have taken a lot of initiatives right from I think last 2-3 years. We are working very closely monitoring our cost to income ratio. There are two components. One is to control the cost, controllable cost. Non-controllable you can't control, but controllable cost, how can you control? And also how can you improve your fee-based income? If you look at our fee-based income has been growing on a quarter-on-quarter basis and YOY basis also. So fee-based income, our growth during this financial year is around I think 32%. Let me just 32%. So on a quarter basis, and on a YOY basis it is 25%. So one is we are working on fee-based income, and second our control on the cost also. We have been very particular about the budget given to the field. Our teams monitor the expenditure against the budget. Various cost control measures have also been implemented, and if you look at our total operating expenses has also come down from the previous quarter to this quarter. So these are the things which we are continuously monitoring And second thing, if you look at our previous year, our cost income ratio was high. At that time also, our recovery from the return of accounts was very high. So that was around 2,400 or 2,500 crores. This year it is around 1,300 crores. In spite of that, we are able to reduce our cost to income ratio. So every effort is being made to improve on income, fee-based income, and also to reduce our controllable cost. And that these measures will continue in this financial year also.
Is there any follow-up question?
No question. So thank you for that. So now if I look at a segmental NPA book within personal loans, so if you see, there's been a slight uptick in this quarter. Any specific reason?
See, I think there is a very small uptick is there. It's not substantial. Against 2,700 crore of book, our NPA is only 39 crore. Yes, last quarter it was 31 crore, but this is 39 crore. Maybe because of some reasons it will be there, but there is no specific reason. It is hardly 1.43% in personal loan book. That's not a worried factor for us.
So now a broader last question, which is on the future vision, like your broader vision for the bank for the next few years. So how we've significantly improved our ROAs and our performance last few years, and now we're ending the year somewhere around 0.8%. So what are the steps we are undertaking to build towards a 1% ROA franchise?
See, to build on ROA, we need to improve our net interest margin. We need to continue to focus on our CASA growth also, and our NI improvement also. So there are number of parameters where we are working. We need to work on our TWO recovery also. So lot of initiatives are being taken. 0.87 we have reached, and if you look at for last so many quarters, every quarter there is an improvement in our ROA. So the same trend is expected to continue in the next financial year, and I believe that by end of next financial year we should be nearing to 0.95 to 1% ROA levels.
Thank you. There is a question in the chat box. How do you see the impact of the ongoing West Asia war in your MSME portfolio, and what percentage of your MSME portfolio covered under CGT SME?
See, in the current scenario, we have not yet seen any major impact currently. If you look at our slippages, they are in tandem with the previous quarter from the MSME segment. There is no sharp surge in slippages, number one. Number two, if you look at our SMA book also, within the overall SMA book, the SME SMA book, that is also in the same trend as the earlier quarters. So I don't foresee any major impact. There can be some impact, but it's not going to be a very major impact in the next financial year. But to counter those contingencies, in case if at all, we have built already 341 crore of additional buffer by way of a provision in our standard book. So that will take care of all the requirement going forward. And around 40% of our advances are covered under CGT MSC.
Thank you, sir. The next question is that what is your total AFS reserves as on FY26, March 2026?
AFS reserves. Give me a second. I'll tell you. It's minus 140 crore. It's minus 140. Negative 140.
Okay, thank you, sir. The next follow-up question is from the line of Ashok Ajmera. Please go ahead.
Thanks for giving the opportunity again, sir. I would like to have some of your views or clarity on the treasury operations, because the treasury has not contributed, this time into the profits, or rather it's negative only. But if you look at the segment-wise results, the treasury operations are showing 848 crore of profit as compared to 557 crores. So in segment-wise, is there any like some part of the this other than the treasury things have gone into that, or and how do we see the treasury performing in the now coming financial year, in this current quarter and the remaining 3 quarters?
See, Ajmera ji, if you talk about treasury, you know that treasury is a play of your yields. So last quarter yields formed up and it was more than 7% for a long period of time at the quarter end. Also, as a result, there was MTN on AFS book also and HFT book also, and that has impacted little bit not only to our bank but to other banks also. But fortunately, our bank, we had very slight impact on our P&L because our treasury, I think, had a profit of around 130 odd crore last quarter, but this quarter it was a minus 12 or 16, minus 16 crore only.
Yes, sir.
So for an AFS book, 135 crore of the negative impact was MTM was there. And now by the way the yields have now moved down, so it's ranging in the range of I think 6.95 to 6.98. So already some of the provisions or the losses which were booked in March, they have already been reversed if we take MTM today. And going forward, I think the way the liquidity market is behaving, the way the things are shaping out, once the I think stability in the overall global environment is achieved, I think there will be good amount of treasury traction in this financial year. Again, it is subject to the global stability in the environment.
Sir, any clarification on the segment-wise figures, numbers, sir?
I'll give you. I'll give you separately. I'm not,
Okay, sir. No problem. So I'll take it offline, sir. Okay, sir. Thank you very much, sir. Thank you.
Thank you, sir.
Thank you. There is a question in the chat box. What is your total gold loan portfolio as on date, agri and non-agri? And what is the weighted average yield for this?
The gold loan portfolio in the retail segment is around 5,400 and in agri it is around 12,000 crore, 12,200. So put together, I think 18,000 crore is our total gold loan portfolio as on date. And yield will be around, I think it should be around 8.5 to 9%. I'm not having exact number, but it should be around 8.5 to 9%.
Okay, thank you, sir. Participants, those who have any question, please raise your hand. As there is no further question, I hand over the call to MD sir for his opening remark or closing remarks.
Thank you. Thank you to all the analysts and investors for taking out time and attending the conference call, earnings call of our UCO Bank for the financial year 25-26. And we look forward for your continued support in the next financial year, and whatever guidance we have given, it will be our team's endeavor to deliver on the same as we have been delivering for the last 3 years. Thank you very much.
Thank you. That concludes the UCO Bank Q4 FY26 earnings conference call. Thank you.